makers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Anna Edwards, live in London, in for Francine Lacqua this morning, and these are your top stories. Tech stocks rally as Nvidia's upbeat outlook eases concerns that the AI trade is losing steam. Kevin Warsh in the spotlight at Jackson Hole this week as central bankers gather to discuss global inflation risks and the prospect of higher borrowing costs. Plus, Bloomberg learns that Russia's President Putin is preparing to escalate attacks on Ukraine after deciding peace talks have reached a dead end. Welcome to the programme, everybody. Let's focus in on the markets then, and this is the current picture across a host of assets. We've got S&P futures moving to the upside, up by 0.4%. Nasdaq futures are up by 0.9%. That really is the Nvidia effect right there. US 10-year yields in focus across the curve, really, as we work our way towards what comes at Jackson Hole. The international contingent may be telling a different story, perhaps, to Kevin Warsh, but we'll watch all of that with interest. Euro-dollar at 116.55 this morning. The Brent price at $87 is the handle there. Down by 0.9%, and that is putting some downward pressure on some European stocks in that space. And thinking about European stocks, let's show you how the picture across the European geography plays out this morning. Under a little bit of pressure, it would seem, on the CAC 40, on the London market, both of those markets down by more than 0.3%. The benefits of technology going higher being felt in Germany. That market is up by 0.2%. The AEX is somewhere in the middle, and the SMI actually under pressure today. So the Swiss market under pressure as we see some lack of enthusiasm this morning for some of the drugs names. Let's have a look at where we are pre-market on Nvidia over in the United States. So post-market, we saw it bounce 4% after some initial volatility on the back of the numbers. But now pre-market, we're up by 6%. So that seems to be the latest sense of where we go after the close yesterday, having factored in all that we've heard from Nvidia. So in a post-earnings call, the CFO of Nvidia, Colette Kress, gave a bullish sales outlook. And that seemed to be the key bit of new information that sent the Nvidia share price higher after hours. It eased concerns that AI spending is set to lose momentum.
The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028.
So that's the Nvidia setup. Now we're joined by Mark Bergen, Bloomberg's senior European tech reporter, with us on set this morning. Mark, nice to have you with us. So lots to think about when it comes to the numbers. The big new piece of information seems to be that 70% revenue growth forecast for fiscal 2028. Unusual to get that kind of clarity and visibility maybe from Nvidia. So that was a positive. What stood out to you?
Yeah, it was well above the, I think 45% was the estimate. What stood out was the direction of travel before that comment was in the opposite direction, right? The earnings was a bit of a beat, but we saw some pressure on margins, and that, I think, is the evidence of this memory chip shortage that has hit Nvidia pretty hard. And these rising concerns that it can keep up its market position clearly indicated this rare outlook as a sign to reassure investors that it can and it will, and it believes. And we saw that, both Jensen Huang was repeatedly saying, this demand is ever present. We can't keep up. And that was sort of the consistent message. Now,
earlier on this year, Mark, we were very preoccupied by the theme of SaaSpocalypse. And then we were very fearful about, yes, AI is going to be extremely powerful. What's that going to do to software as a service and all those companies that provide that software as a service? Salesforce, then, in mind as a result. The Salesforce management team very adamant that this has been overblown and that we've got the answer. It's all fine. And there is no SaaSpocalypse. Is it too early to say? What have we heard from Salesforce?
Certainly that's Mark Benioff's position. They are probably the biggest target of this largest software company that has, a lot of it is marketing, and Benioff is very good at that. What they announced yesterday was also the extended partnership with Anthropic, right, introducing Claude partnerships with Salesforce products. I think there's still a lot of to be sure there about what actually how that integration will work. If a lot of companies that are paying for Claude already are going to want to continue to pay for Salesforce, because the underlying thesis behind the SaaSpocalypse, and I think it has been demonstrated, is that there are a lot of these AI tools from Anthropic and others that are replicating and often replacing the software to legacy systems that companies like Salesforce have been selling for years.
Okay, well, one that we'll continue to watch, one theme we'll continue to watch. Another is safety and legal challenges, I suppose, to some of the social media businesses. Meta comes to mind in the tech space as a result of that. In the past 24 hours, agreeing to pay up to $18 billion, this to resolve a social media, set of social media claims over in the United States. How significant is this? And this doesn't feel like the end of the story, does it? Because the things they've agreed to do, they're saying they're just doing in the US so far.
Yeah, and it was, their 1.4 trillion was a sort of big, the number that Meta put out that could be the extent. This is obviously much smaller than that. I think what was interesting, I saw from our reporting, was that some of the payments were contingent on Meta saying, listen, we want TikTok and YouTube to do the same thing. And those companies, and YouTube in particular, was part of the same class action lawsuit in California that set off this whole thing. So far, TikTok and YouTube have not responded. They certainly didn't come out immediately and say, sure, we're going to take the same measures, I think in part because they don't believe that they're as culpable here. This is Meta not admitting to any wrongdoing. This is introducing a lot of features. I think we're going to see some pushback here. We've already seen it on the BBC this morning from a UK secretary. I imagine Brussels will not be happy with the fact that these safety measures are only going to be placed in the US and they're not doing similar measures here. Yeah,
it feels like the start of a conversation or an ongoing conversation, perhaps. Mark, thank you very much. Thanks for bringing us all of the latest news flow around these tech themes. Mark Bergen from here at Bloomberg. Now, let's take a wider perspective of what we learned about the AI rollout. US equity futures then are pointing higher as Nvidia's sales outlook reinforces optimism that this year's AI rally has further to run. I'm pleased to say we're joined now by Ozan Tarman, Vice Chair of Global Macro over at Deutsche Bank, with his perspective on the AI boom. Ozan, nice to see you.
Great to be here.
Thank you very much for coming to see us. So was this a clearing event, the Nvidia numbers? Are you now reassured and we move onwards and upwards with the AI theme?
First of all, you always invite me on wonderful days, aftermath of Nvidia, right before Jackson Hole. Champions League, my team Fenerbahce makes it after a long time.
I wondered how long we'd take to get to the football.
There you go. Dark blue, light blue tie. I wish I could say that, but no, it's not a clearing event yet. Big stakes are in for September. Nvidia, yes, it was wonderful to have that sales number out there. Just like Mark said, by the way, the first reaction was, as expected, oh, this is great, but may at the end. But Jensen is a wonderful salesperson. The moment CFO Chris said that 70% number into 2028, who knows? But the moment she said that, we started flying. So that gives at least all U.S. lifted mood for the moment. But still, Jackson Hole is key. September is key. In some of these macro dinners that I do, in one of the more exclusive ones in July 2025, a very well-known client friend of mine, not Stan Druckenmiller, said that all 4 key countries, US, UK, France, Japan, even at that time, a year ago, what if all of them have a trust moment come September? Well, we sort of did for 4 hours, for gilts only, and then we never looked back. This time around, it looks a lot more serious for reasons that we can get into. And hedge funds are ready to play for it. So stakes are very, very high. OK, and you're making the link there with Nvidia because the AI theme could be brought down, or at least the rollout delayed. Question. It's linked. Because I don't think they're right. But if they're right about this trust moment and finally getting that above 5% TY, US 10 years, France spread blowing away even more, the Japan moment, etc., then it's very hard for even revenues, the famous revenues, to keep AI trade up. So anti-risk parity, the way it would work is rates higher, equities a lot lower. They've been hoping for that for a while. I think they'll be wrong again, but they will try. OK, so that's what we're expecting, the drama that could unfold in September. I mean, there are lots of who push back at the idea of the US having a trust moment, the dollar for as long as they can print dollars. Maybe things look very, very different. And I mean, maybe higher yields, as Druckenmiller was saying, maybe higher yields are justified by the growth story in the United States. So does it have to be a negative if yields go a little higher from here? The in-vogue thing for them to say is higher rates indicates growth. It doesn't necessarily mean bad news for equities. Yeah. But we always say that the moment you give me... is it sometimes true? You're smiling for a reason. The moment you give me, Fed all of a sudden hike 2-3 times right in the next 4 months, I don't think equity market will first like that. 4 or 5 people are the same people, Anna. The person in June, right before the first Warsh presser, said, oh, this was an excellent presser. He sounded hawkish, that's why long end is under control. Then another person, right before July, he really was hoping that he would hike, even though only 30% was priced in for a hike, and the data was tame. I think he did the right thing. I mean, presser, we can get into it, bashing PC, etc. But overall, he did the right thing by holding. My same person said, oh, that's a big mistake. Equities will go lower, rates will go a lot higher then. For other reasons, they were sort of right about rates. They were totally wrong about equities. Equities continue to go higher. Then the Japan intervention, when most of us were away in the Aegean, Besant was involved in that. For most of fast money, that's supposed to be a big mistake. And the final one, last week, Besant comes in again, more or less, give it other names, de facto financial repression.
Right.
A la EM, a la Hungary, a la Turkey, including Druckenmiller. Some people didn't like that. But I think it's working. Those 5 people frustrated are the same people wishing for US 10-year to trade 5% and above. And the minority thinks that financial repression may end up beating these fiscal dominance hopes.
Okay, but are there high enough yields that would bring back demand for treasuries at various tenors? And what does that look like to you?
I think at the very beginning, my gut feel is they will want for a bit higher. Tomorrow is key, what he's going to do. Either whatever being hawkish is, like maybe saying that I really mean that 2%, I respect PC and I do want to think that 2% inflation, and or balance sheet. The urban legend was that he would care much more about balance sheets. I think you cannot care about balance sheet if the other guy is buying back 30-year and 10-year. So he may say, no, the real tool is the interest rate, not the balance sheet. Hawks would like that. Or maybe he won't say anything. I doubt, by the way, but maybe he won't say anything. It will be just like the last presser. Then, again, it will be regarded hawkish. Why? Because he made a mistake, long end should sell off, etc., etc. So what I'm trying to say is coming to September, they will find for excuses to get these yields higher. But I think real money will play the other hand, especially if data helps. Look at the data. CPI lower, PPI lower, NFP, disaster number, not discussed much. PCE, in line. Headline comes 0.1 higher. Oh, let's make TY 2-3 basis points higher. The game is very clear.
So you think hedge funds do you think hedge funds are thinking too much about inflation then? Actually, there are more disinflationary forces out there?
Thinking or pushing for it. They are innately or not, they are consciously or not, higher volatility is better for my hedge funds, fast money friends. And for real money, risk parity is better. So consciously or unconsciously, that's the big game that's being played.
Yes. Well, I mean, is there a danger they lose then if the inflation data continues to come down?
For sure. That's why it's a very high stakes game. So it may not be like September 2025 this time around. I think they won't lose again. And I think Mike Binky, chief equity strategist, famously for 4 years in a row, he will be right. 8,000 S&P seems even a conservative target. But before I can say all that to you in December, November, I think we will go through some fears. So on your program, I'm highlighting this. There will be a lot to be played for.
There will be a lot to be played for. There will be a lot of drama then in September, it sounds. But where will stocks be then by the end of? Well, you've given us the target by the end of the year, which sounds pretty positive. So, I mean, where does that take us in the AI narrative? I mean, does that at the end of the day, does it mean that September's just a drama we can put behind us?
Maybe not just September, by the way, September, October. This will be into midterms. This will be, I'm head of sales as well. We need to market it. It will be a hectic quarter. But to your question, famous last words, Anna, but I don't think, back to Champions League, I don't think we're even in the 75th, 80th minute of this game. I think we're definitely not in the first half. So I understand all the valuation arguments. I understand all.
And this is the Treasuries and the fiscal game in the United States.
No, this is the AI game.
The
Valuations,
AI game. Okay.
your apocalypse, what's going to happen to Salesforce. We're not in the first half. Valuations are stretched, but my gut feel to reasoning is that to really create a bubble, we need to make a bigger bubble first. Some of my most credible IG and high yield credit PMs are also saying the same thing. First, we need a lot more issuance before we can really pop it up. So I think there is more.
So we've seen quite a lot of issuance from hyperscalers and others in the AI space.
And then they're going to Europe and sterling as well.
How much at the foot? Are we just at the foothills of that phenomenon? Do we see a lot more of that coming? A lot more credit?
I'll hedge. We're not in the foothills, but we're not on the edge either. So that's why 90-minute football game, we're like 70-minute-ish. So
I messed up your football metaphor, didn't I?
I'll come back.
So we're beyond the starting whistle, but have we made it to the first hydration break?
We made it quite past hydration break. First of all,
I can't believe I'm saying that, hydration break. That's terrible.
I hope we get rid of all those hydration breaks.
Yes, I'm sure that is an opinion shared by many viewers. Ozan, thank you very much. Thank you so much for joining us.
I'll be talking about all these in my book, Shoulder to Shoulder, political economy, matches, life, and all that stuff.
Okay, I'll try and read it before September. Could be useful. Ozan Tarman, Vice Chair of Global Macro at Deutsche Bank. Now, oil prices this morning, a little bit weaker, 87 is the handle. They are easing once again this morning as investors weigh progress on diplomatic efforts to resume shipping through the Strait of Hormuz. Iran's military says it has reached a revenue-sharing agreement with Oman on the waterway. Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar joins us now with more details. Abir, so bring us up to speed on this. Have we actually got some agreement on what this is going to look like? How much of an impact is this going to have?
Good morning, Anna. It's a little bit premature at this point to determine just what exactly is the impact going to be on the ground, of course. But what we know is that this is the first positive step towards an agreement when it comes to the Strait of Hormuz, particularly over the past couple of months. And so what we know is what we've reported over the past day or so, and that is the fact that Oman and Iran have reached an interim agreement. So this is temporary in nature, and then further discussions are going to take place. We'll open up the Strait of Hormuz over the next period, which is 30 to 60 days. Now, over the past couple of months, Anna, we've reported the mechanisms for inbound and outbound ships, so some details there. But perhaps what is most interesting, of course, is the claim in this agreement about who's going to manage the Strait of Hormuz. And then the latest that we know from the IRGC is, of course, the demining efforts that will go through and some of the other details that will be ironed out over the next period. And then, of course, when it comes to the demining, that is something that's been contested between the U.S. and Iran. President Trump has made the claim multiple times that the strait is free of explosives, that ships can make their way through. But we've heard from the IRGC that that's not true, that the only people who are aware of where these explosive devices are officials in Iran. The IMO has said the same thing. And then our Bloomberg economics team also said that it's highly unlikely that all the mines have been removed from the Strait of Hormuz. So those are details that we're going to be seeing being ironed out again over the next few days, few weeks. But for the time being, as you've mentioned, Brent crude prices and traders are looking positively towards this news, the first breakthrough when it comes to the waterway in quite a while. And so you're seeing them down about 7% this week, down for a fourth straight day today. So again, some positivity, although the wider negotiations are nowhere in sight still, Anna.
Abir, thank you very much. Bloomberg's Abir Abu Omar in Dubai. Coming up, how Lockheed Martin is building and maintaining transatlantic partnerships despite the US pulling back from spending in Europe. This is Bloomberg. Welcome back. This is The Pulse, 20 past 9 here in London, and a red headline across the Bloomberg terminal in relation to the AI build-out story and the, shortage of memory chips that we have. So Kioxia and SanDisk are planning to spend more than 5 trillion yen, we understand, to ratchet up production capacity. That's $31 billion or so across Japan, aiming to boost output of a critical AI data center component that is in short supply. So that's the latest planning over in Japan from these crucial companies. The European CEO of US defense company Lockheed Martin has told Bloomberg that transatlantic partnerships will create economic benefits for both sides, as well as building credible deterrence. He spoke to us exclusively a little earlier.
Europe is really stepping up now as a consequence when it comes to security and defense. It's really about, building up capacity in Europe, building up deterrence, credible deterrence. And I think this should reinforce transatlantic cooperation and not replace transatlantic cooperation. So for us, really, the focus is on, how can we help building up capacity, readiness and resilience for the customers, And I recently joined the NATO summit in Ankara, where we announced together with Rheinmetall a joint venture to produce ATACMS missiles in Germany, so in Europe. So this clearly shows, if we go in together in those transatlantic partnerships and corporations, that will build a credible deterrence, strengthening the alliance as a whole and creating economic benefits on both sides of the Atlantic.
But where do you see the biggest dependencies still on the United States? Is enough being done to bridge those gaps in European sovereign capability?
Clearly, European governments want to have more sovereign capabilities, and they want to build up their own industrial base. And I think these are legitimate customer requirements. The question is, how does that translate for us into action? We want to help to get a capability faster in the hands of the customer in partnership. And so I would call it smart autonomy. So really going in together, building up those capabilities together. This is really what will make the difference. For us, I think the ATACMS example is a very good one. This is a critical technology that's not available on the ground in Europe so far, but we make it available together with Rheinmetall.
Would you want to tell us more about how the partnership with Rheinmetall is going and how you expect that partnership to evolve going forward?
You're probably aware that Rheinmetall is already building F-35 centrifuges in Germany, so they are delivering at that end. So for us, it's a truly strategic partnership. So we are looking at more options, integrating our munitions into Rheinmetall vehicles. So there's a really good cultural fit from my perspective, and the teams are highly motivated, and we are all in to deliver as a team.
That was the Lockheed Martin Europe CEO, Dennis Gorga, speaking to Bloomberg's Lizzie Burden. Now, Bloomberg understands Russia is preparing to escalate attacks on Ukraine after concluding that negotiations for a peace deal have reached a dead end. Let's get more details on this report. Tony Halpin, who leads our Russia economy and government coverage, joins us now. So a really fascinating report by the team here at Bloomberg then, Tony. What more can you tell us about the escalation plans as we understand them to be in Russia?
Yes, good morning, Anna. We've basically learned that Russia is giving up on any real prospect that negotiations will deliver what Vladimir Putin is looking for, and it's decided that the best route for it now is to escalate particularly ballistic missile attacks on Kiev and other Ukrainian cities, targeting infrastructure, looking to weaken morale there and weaken their ability to resist. And as they've got one eye on winter, of course, they're looking ahead. Ukraine has already said that basically it doesn't have enough interceptors to defend itself against Russian attacks. Russia's defense ministry overnight said it launched a massive attack on numerous Ukrainian cities. So they're intending to step up these assaults. They're intending to increase the levels of damage, try to break Ukrainian morale and will to resist, and to impose terms that Vladimir Putin has been looking for and has concluded that he can't get any more from negotiations. They consider the negotiation tracks have basically all collapsed.
And Tony, we have the Wall Street Journal reporting that the recent CIA visit to Moscow, we saw the head of the CIA flying into Moscow briefly for a meeting, and I noticed that Interfax is now saying that Russia's intelligence chief met with the CIA's head. The Wall Street Journal is reporting that the reason for that was because the US wanted to warn Russia not to attack a NATO country. How do we interpret that kind of news flow, bringing NATO into this?
Yes, well, I think it's pretty significant that the director of the CIA flies in person to Moscow to deliver a message. That underlines, I think, the seriousness of it from the US point of view. And it's clearly the case that Europe has experienced a number of what they call hybrid attacks in recent months, involving things like drone incursions or arson attacks or other incidents which they have pointed the finger at Moscow over without directly accusing Russia. And the problem there is that Europe doesn't really feel that it can confront Russia by by directly calling it out. And at the same time, it sees that these tensions are increasing along the border. So there was clearly some sort of message delivered to Moscow. It remains to be seen whether Moscow takes that on board.
OK, thanks very much. Tony, Bloomberg's Tony Halpin. Coming up on the programme, how AI could change the way we invest in medicines. We'll be speaking to the co-founder of the healthcare-focused hedge fund, Braidwell. That conversation next. This is Bloomberg. Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, in for Francine Lacqua here in London, and these are your top stories. Tech stocks rally as Nvidia's upbeat outlook eases concerns that the AI trade is losing steam. Bloomberg learns that Russia's President Putin is preparing to escalate attacks on Ukraine after deciding peace talks have reached a dead end. Plus, Kevin Warsh in the spotlight this week at Jackson Hole as central bankers gather to discuss global inflation risks and the prospect of higher borrowing costs. Let's get more on Jackson Hole now, where Kevin Warsh will make his first appearance as Fed chair. Bloomberg Markets Live strategist Venram is with us now. Yesterday we had US PCE data boosting Fed bets then, Ven, that the Fed is going to hike in September. Does that complicate things for Fed Chair Warsh? How are we anticipating he will present at this event?
Welcome back, Anna. So I think that, look, we have moved to this regime where inflation is constantly about 3%. Last year, we were talking about core PCE that used to be 2.7%, 2.8%, and we were raising eyebrows then. But now we are talking completely in a different language. 3.3, 3.4% range has become the norm. So, you know, and the Fed acknowledges that as much because, you know, if you look at the core PCE projections for 2026, it's spot on at 3.3. So I think the question for the Fed is, you know, how are they going to contain this inflation overshoot? And they probably need to raise rates because the neutral rate has shifted higher. But the neutral rate has shifted higher because of the demand for AI funds, AI-led funds. We have seen huge capital raising. So I think they need to put up rates, and I think that the markets will be looking for answers from Kevin Warsh. So far, what he's been giving us is that very hawkish language, but with one that has been divorced from their action. So I think that the markets want to hear confirmation that they are still pursuing the inflation side of their mandate rather than the employment aspect of the mandate, because, you know, we have had that lean patch of jobs data. So the markets want confirmation that he's still focused very much on inflation.
And talk to me about what's been going on with gold then, Ven, and your thoughts on that. We've seen quite a lot of strength in the gold price of late. It's been caught up in a lot of the conversations about what's happening at the Treasury and their activities within the US Treasury market. But at the same time, it also takes a read across from interest rate expectations. So what do you see on gold?
Well, we've had a stunning 14% rally in gold this month. Very few people expected it because it was hardly finding any traction at $4,000 an ounce. Suddenly, as you mentioned, on the debasement trade talk, because, you know, the Treasury announced that buyback and the gold surged because, you know, gold and Bitcoin indeed surged. But now it's got the momentum. If you look at the charts, it's kind of nearly overbought in the short term. So Kevin Warsh's guidance is going to be crucial. If he comes out talking hawkish, then that is going to be putting a wind into the sails in dollar, and that will deflate some of the exuberance in gold. So there could be some profit taking. But if he sounds dovish and says that, look, we need to keep in mind what is happening to the labor market, I think that will engender gold again. Gold is overvalued at these levels, but I think it could still go higher from here if he sounds dovish.
OK, yes, I wonder if the fact that it is quite resilient at these levels, I wonder if that tells us anything about expectations into Jackson Hole. Ven, thank you very much. Ven Ram from the Markets Live team with his thoughts ahead of the Jackson Hole symposium. Kicks off today, coverage from Jackson Hole, including Kevin Warsh's speech. That speech is tomorrow, of course, Friday, but all of this will be on Bloomberg TV. Lots of special coverage, programmes presented from the symposium, of course. Now, on to technology, and China's Z.ai has revealed it was behind the mystery AI AI model called Ox Alpha. It surged into the top of the online usage rankings after outperforming rivals, including DeepSeek. For more, we're joined by Bloomberg's Anthony Stevens. Now, this did come as a bit of a surprise, didn't it? The launch of this model over the weekend, but it didn't stay a secret for very long. It was met with a lot of enthusiasm by users of AI. Just how significant are these developments then? We now know the company behind Ox Alpha.
Yeah, this kind of guerrilla marketing is very common in China. Alibaba did it as well. And once they saw the popularity of the model, they decided to reveal their hand and also reveal some pricing. So the pricing is on the low end of things, as you have come to imagine, from China, joining DeepSeek at around 0.5 cents a million token on the input and 0.5 output tokens, right? So it's interesting. It's very cheap. It's very good on the Pareto efficient kind of frontier between cheap and good. So what does this mean for China's LLMs? It means they continue to dominate the bottom end of the market, where you do the rote tasks, where you do agentic tasks. What's interesting about this model is a multimodal model, meaning you can input text or video and give it tasks to do. So you no longer have to depend on just pure kind of tokens or chat conversations. The stock was up around 8%. It has earnings on Monday. Remember, this stock was one of the high flyers of the Hong Kong stock market. It's come up around 60% from the highs. So it's good that it's kind of managed to refresh its story here going into the second half.
OK, and use of Chinese models or open source models more widely certainly got a mention on the Nvidia earnings call, didn't it, Anthony? What does this mean then for Nvidia as it steps back into the Chinese market?
Yeah, and it's an interesting read-through because Z.ai said that this entire model was trained in China, right? And so we took that piece of news into the Nvidia earnings, and the analyst asked this question directly to Jensen. And he said, look, open weight or closed weight, it's good for our ecosystem. People need computing power wherever it comes from, and it's a general positive. Now, that narrative is an interesting one because it's not really playing through in China in their results. At the moment, China is sub 1% of Nvidia's data center sales. There is a lot of China sales, by the way, in the numbers. It's around $8 billion, but some of that is an accounting quirk because a lot of those sales are booked out of Hong Kong, for example. So let's ignore that. The pure data center numbers are very small. There's zero guidance still, and there's so much controversy geopolitically about chip sales to China. For example, there's a Singaporean company that's just been accused of chip smuggling. In the meantime, China's own tech ecosystem has come to play. And today, for example, you see the Chinex up 1.7% in response to the fact that Jipu said that this model was trained in China. A lot of Chinese tech names on the semiconductor supply chain were up 5 to 6% today. So that's quite a big expression of confidence in the Chinese ecosystem today.
Anthony, thank you very much. Bloomberg's Anthony Stevens there. And Anthony mentioned those allegations of chip smuggling. And let's go to that linked story now. Bloomberg understands the US government is investigating the Singapore-based Apex Logistics over its suspected role in smuggling Nvidia AI chips to China. For more, we're joined now by Bloomberg's Kari Sue Lindberg, who's in Hong Kong and can bring us the story. So what more do we know about the investigation? The scale of it is a little difficult to ascertain, perhaps.
That's right. According to the company matters, the U.S. government is only investigating 47 shipments, but it's unclear what the size of those shipments is, meaning kind of how many servers were in there. And that would really depend the size and scope and, to what extent the U.S. government would view it as a national security issue. But I think what really is fascinating about this is that you can see how this kind of black market underground system demand for these chips has really spanned kind of a global effort. These chips that were smuggled according to the US government probe went from Taiwan into the US and then to another third-party Asian country, either Malaysia or Singapore, most likely. And then they went to Hong Kong before they were trucked into mainland China. So there's a lot of logistics around there. And that's what makes this company so fascinating and this story so fascinating.
Yes, I mean, Apex and Kuna and Nagel, who are the parent company, both to the extent that they've been in contact with investigators, say that they are cooperating with all of this. So why does this matter very much?
Yeah, I mean, that's exactly right. They are When we responded to them, they did tell us they are cooperating. But why does this matter? Because this is, if you pay attention to kind of all the smuggling cases that have been charged by the US government, this, if they do go and charge the company Apex Logistics, it will be the very first action against a transport and logistic company for allegedly participating in the illegal semiconductor trade industry, which would be a big game changer.
Thanks very much, Kari. Yeah, good to speak to you. Thanks very much for bringing us the latest on that news flow. Bloomberg's Kari Sue Lindberg. So lots of tech themes to bring together this morning. Let's pivot our attention to the healthcare sector and how that could be transformed by AI. Healthcare-focused hedge fund Braidwell has reported early optimistic signs from its in-house AI investment system, which tries to identify opportunities to invest in therapeutics. What does all of this tell us? Let's bring in Alex Karnal, who is a co-founder and CIO of Braidwell, and with us this morning. Alex, nice to have you with us. Thank you very much for joining us.
So great to be here.
So let's start at the beginning and tell us a little bit about the business and what it tries to do.
Yep. So we're trying to back the most transformative medicines, technologies, and medical devices that can impact human health. And we, from the very beginning, thought that in order to do that in a way that could move our collective fight against disease, we require the intersection of incredibly talented people with the most sophisticated technology. And so from our beginning, we've spent basically the last 5 years collecting every single data point that we've ever come in touch with, every one of the reasoning traces that's led to a good decision or a bad decision. And we've brought all of those data points together to start training our own internal proprietary AI to help further advantage the incredible people that we have making decisions on the front line. And what we've seen is pretty remarkable. The ambition early, in the early days of AI and what that would do to our investment process, was to arm our team with a co-pilot and a tool to help them make decisions better. And we decided, just given how great the models in general have gotten and how far along our internal proprietary model has gone, was that it was the right time to actually give the machine a chance to start making its own picks.
Okay, but with a human in the loop? I mean, how does that work?
Completely autonomously, and there was a reason for that. So when you think about a great investment process, one of the biggest dangers in an investment process is bias. And so when we build our team and think about our process, we've brought together people from lots of different backgrounds. In fact, we look more like a biotech company than a typical investment firm. We have data scientists, biostatisticians, scientists, discovery researchers, and investors all sitting together in a room, all with orthogonal capabilities that help us to get to a better and better answer. And that works really well because everyone's independent perspective will help to combat bias. And so we thought, from a hypothesis perspective, imagine if the machine can autonomously make its own selections, and imagine if those would be different than what our own team would select. And so I could share with you some really exciting data. We set the machine loose about 4 months ago to go and try to see what it could do on its own. And it was remarkable. So far, what we have seen is that it got 80% of its selections correct. But that's not that interesting because it was in the context of a market that was performing really well. What was most interesting about it is when you looked at the performance of the winners that it picked versus the losers, it was picking up almost a 4-to-1 reward per unit of risk. And if you compare that versus a pretty favorable market environment, it was almost double what the market was giving you when you look at the winners versus losers.
I mean, what does that leave for the very talented people that you employ then to do, Alex, if the computer is so good?
It's exactly the right question. And I do feel like when we look at some of the language around AI, I think there's many people that are worried about the end of our humans in the loop and jobs for people. We actually see the opposite at Braidwell. What we found from the amazing performance of our switchyard is that the ideas that it found were 80% different than the ideas our team found. And so when you think about building a portfolio, portfolios improve when you have increasingly better ideas and a better variety of those ideas. And so what we believe is actually what the winning setup is going to be. What the systems that are going to drive innovation in the future are going to look like are going to be at the intersection of the most talented people and the most talented AI systems working together hand in hand, debating, discussing, and driving to the best portfolio we can.
Does the system then make decisions that humans don't understand, and does that matter? Can the system explain why it bought one thing over another, and do you as humans need to understand that?
Yeah, that's the key difference with what I think we can do today with AI tools than what we used to have in the past with some machine learning. What I love about what we built is it not only gives you the recommendation, it is autonomously doing its research and updating its hypothesis. It writes an entire investment memo that takes you through step by step. And that fits right into our process, because that thesis that Switchyard can create goes right into our morning meeting, and the team can debate and discuss it. Now, the nice thing about the AI system is it actually will show you the value of information. It can rank order. If we could get further certainty on this input, it means this for the thesis, and the team can attack. And so what you see is this incredible virtuous cycle of our people working very closely with the machine to get to an increasingly better answer.
Okay, and the increasingly better answer, is that more money, or is it more nuanced than that? Because you have to incentivize the machine. You have to give the machine the right incentives.
Right. No, that's exactly right. And so what are you trying to teach the machine to be able to learn, to be able to deliver? Well, a lot of different dimensions. We start, though, with human impact. What we have found from all of our time, couple decades, building and backing the amazing biotech companies, what I have found is that if you start with the greatest needs, the greatest sort of most impactful areas where you can combat disease.
That might not be where you make the most money.
Well, it might not be where you make the most money, but if you start there, what you've figured out is these are the biggest problems that exist in healthcare today. And then you could set the machine loose on sorting through those where there's a gap to be filled, and where it hits the return hurdle for the people that are backing us from an investment perspective. And so I think what you can do is find the balance of both. And the virtuous cycle that you need to achieve in our world is produce increasingly better returns and have increasingly more impact.
Okay, and so that's the role for the humans as well, I suppose, is to set those parameters and to set the guardrails.
Yeah, that's where the vision and the ability to sort of have perspective on where we need to go really will drive the machine to a better answer.
How much more quickly are we going to be able to discover new drugs then? I mean, on drug discovery, that's one area where people are very excited. How much more quickly will that process unfold, do you think?
I think that's a great question. So what we see in drug development today, prior to AI, is it took 7 to 10 years to get a medicine from the idea on the napkin to the bedside of somebody that it can help. And I'd say what I'm most excited about is when you look at one of the longest parts of that process, it's what we call the discovery. How do you go from the idea and the understanding of what's driving a disease to a molecule that can change the course of it? And what we're seeing from some of our partners, like Lila Sciences, Nabla, Proxima, is that discovery time period that used to take somewhere between 2 to 4 years can be radically condensed. I'll share with you a really exciting example. So Lila Sciences is working on building AI-driven science factories. Now, those are a lot of big words. What it means in practice is they've taken the position that a lot of the AI in bio today is very much akin to a really well-read scientist that's be able to generate hypotheses. Lila completes the cycle by taking those hypotheses and giving them an automated robotic science factory that allows them to run experiments to test the hypotheses and see the answers. Now, that's really important, because if you look at all of the science tokens that exist in the world, many of them are either wrong or misleading, or the most important ones, where the failures happen, never made it into print. And so there's a big missing set of information that unless you can take it into the lab, test and validate, you'll never actually be able to solve the problem. And so what they've shown us is applying those AI science factories to trying to develop some of the complex medicines that we see in our space called in vivo CAR T therapies, which are super exciting because they have the potential to eradicate disease, not with a lifetime of 2,000 injections or 15,000 pills, but with just a few shots. And so there's companies that have taken 4 years to come up with really exciting versions of these medicines. We put Lila Sciences to the test to see if they could beat the best in the market, and they did it in 7 months with 5 people working with a system.
Alex, thank you very much. Thanks for bringing us the story. Alex Karnal, the CIO at Braidwell. Coming up on the programme, how Africa's richest family is preparing to carry forward an industrial legacy and how it could reshape the investment case for the region. We'll have a sneak peek of our exclusive interview next. This is Bloomberg. Welcome back to the programme. This is The Pulse. Nvidia's blockbuster earnings have come as another reminder to Europe about the continued dominance of the US in the AI build-out, the role of China, of course, important as well, and the need then to build tech sovereignty here in the region. Earlier, we spoke to Germany's Minister of Digital and State Modernisation, who says Europe is waking up to the fact that it has to accelerate its AI ambitions.
It's critically important that Europe becomes more independent, that we master technology, also deep tech, and compute and data centers is of utmost criticality here. That's why the German government has set up a data center strategy for the first time with a very ambitious and very clear time plan. By 2030, in the next 3.5 years, we will double the overall capacity of data centers and quadruple the AI-related compute capacity. So that is very ambitious, and we're on a good way here to achieve that.
Yeah. How sovereign is that data center capacity then, if it is built on the back of US infrastructure ultimately? How can we be sure that this is immune to the geopolitical twists and turns of the Washington-Brussels relationship?
Well, I think we have to be clear and define what sovereignty really means. It still means that we will also work in partnerships, and it doesn't mean solitude. And if you go through the stack, then of course it starts very early, even before the chips. It starts with energy, it starts with the chips, and then with the data center, with the software, with the data. And clearly the data centers we're talking about when we talk about sovereignty require that the data is safe, that we own much more of the software stack within the data center, so no one can switch it off. And we are in control of also what's running in the data center, and that's a lot. And increasingly, we'll also have chips made in Europe, but it's clear that the leading chips are coming from the US, and we have some great cooperation there, and that will also be like this in the foreseeable future for several years to come.
Germany's Minister of Digital and State Modernisation speaking to us at Bloomberg a little earlier on this morning. Now, the proposed listing of the Dangote refinery could be a defining moment for African capital markets and a major test for one of the continent's most influential business families. In the upcoming episode, Next Africa, Bloomberg interviews the Dangote sisters as they prepare to carry forward their father's industrial legacy. Let's speak now to Bloomberg's chief Africa correspondent, Jennifer Sabasaja, who can bring us more details on the story. So, Jen, good morning. What else stood out to you from your conversation then with the sisters?
Well, Anna, listen, succession is very important, as we know, for companies and also for the market. So when you take a look at this company, and of course, Aliko Dangote, Africa's richest person, it is of the public interest and, of course, investor interest, really what the succession plan looks like. And so the daughters have been in their roles for now just over a year, but officially were announced into the succession plan of the company earlier this year. And so we wanted to talk to them about really what they see as the next generation and the evolution of the company, especially on the heels of this IPO. Take a listen to what they told us.
By next year, first quarter of next year, you start to see the presence of a family office while looking at the 2030 vision, looking at how we support women, how we support social impact investment, not just the business-wise. We will invest, we will collaborate, we will grow our refineries from, we have in Nigeria, we're going into Kenya, we're doubling our capacity from 650, actually my dad will correct me, 750 barrels per day to double that. So we are well on our way to do that.
Would you look to partner with others in terms of co-investing in any projects or collaborating?
We don't mind co-investing, but we are very much open to partnering when it comes to investments. But when it comes to our legacy, it's going to be our legacy.
Is that because it stays within the family?
It stays within the family, yes. It stays within the family, and it stays within our core values. What really matters to us is our core values. We know what they are. We are also Muslims. We're also Sharia compliant, so it's a bit different, different feel. And we want our businesses in 5 years to still look like we're focusing on that industrialization, but having it to survive the next 8-10 generations. In Africa, from the 3rd generation, you're like, where's what happened, right? So we don't want to know we don't want to be part of what happened. We know what happened and we're going to change it.
So, Anna, that was about the family office and some of the investments that they're making. But still, I think it's important to indicate that it's not necessarily been smooth sailing with these daughters, not necessarily internally or externally. And so we get into more of what the path ahead looks like for them and what they're hoping, especially still considering their father is at the helm in a strategic way. So plenty more ahead on Next Africa from our conversation with the Dangote daughters.
Jen, thanks very much. Bloomberg's chief Africa correspondent, Jennifer Sabasaja. So don't miss this month's episode, then, of Next Africa, premiering tonight on Bloomberg Television. You can also stream it on Bloomberg.com, on YouTube, or catch replays over the weekend. As we bring this hour to a close, a quick check on European markets on the back foot. The CAC 40 down by just shy of 1% now. The Swiss market also weak. In Paris, we see some of the banks a little bit weaker, outpacing losses on the overall market. So we'll keep an eye on that. The brief is up next. This is Bloomberg.